Good morning. Happy Friday. All righty. So, yesterday was pretty much what was expected. Momentum starting to slow down here. And I think we're closer to some kind of a price reversal here. Just common sense looking at the chart. I mean, it's in a strong uptrend. So, that doesn't mean there aren't going to be buyers on a pullback. What stops this market or makes it break the trend? We'll see when it happens. We'll all know. Right. Um, But one of the things that's positive when you're looking at trends, there, of course, there's positives and there's negatives to a trend, right? Meaning, like, is it in an uptrend? Yes, well, that's good, right? From the long side, is multiple time frames in an uptrend? Yes. Well, there's another plus. As it is moving up, how is it moving up? Is it a controlled movement to the upside? Which this has been controlled, but lots of little stalls and starts, but overall higher highs and higher lows, right? We've been covering that for a while. Um, the rather lengthy sideways periods and then the move up that is followed by such a small move up before another resting period. And that's now begun to change, where uh, we had this move up, very controlled. The bar is about the same size in range, and then another, well, a week and a half or so of stall. And that's kind of like the frustrating thing about when prices do that, where you get these moves and then these long periods of kind of second guessing, is it going to turn? Because like here, it's really not extended. You can see it moved up for a few days and then it rests. So as I mentioned yesterday, when we see that type of price action, for buying breakouts, we like to find, correction bars or shakeouts like bars like this. Now, what we've seen happen this week is that the momentum is picked up in a way that it really hasn't prior to any of this. Right. So this was kind of a crawl. Now this is starting to run. It's not a sprint yet. And in reality, we don't want it to sprint, because if it sprints and goes vertical, far from our moving averages and far from price support, that means we're going to have either a longer period of doing nothing, going sideways chop, or ideally, we get kind of a nasty pullback, which we can profit from by shorting. So I much prefer when prices move quickly, aggressively, rather than this type of sideways resting periods that are very frustrating, because you get a lot of starts and stops and attempts to go in the other direction that don't follow through. So now, things, like I said, have started to run a little bit and they get a little far from support. And as the momentum stalls, right, small candle bodies, that's what we had yesterday. And as ranges begin to contract, the probability of a retracement increases. So that's normal. Let's duplicate that, and we go through what we call our factory work of minor support. Now, the high that it took out, now it could pull back that far. Now, as strong as this appears to be, it really shouldn't. And so this little, we don't have much of an overlap there, but I would think that's where buyers would want to show up, somewhere in this area. And if I can put that over here, we can see where that is on the hourly chart. And that would make sense, because that's the largest resting period with a shakeout, downside shakeout. So somewhere in here, if we were to start to get a pullback, is where I would think buyers would want to step up again. Now, the hourly is still in an uptrend. So while that is a thought in a possible plan that could unfold, we have no signal yet of its willingness to do that. We've got a little bit of a breakout and deep retracement here. that occurred earlier. So you're getting a little tired, which is normal. Now, let's just get rid of this on the weekly chart. Let's throw it down here for now. When we look at the weekly time frame, we say, well, is there something different? And there is. It's not. Let's back up here. Look down here at the bottom. Look at the size of the candles. They're huge. Well, it was huge coming down, but now you get this huge beginning of a turn. And so as prices moved up here, we got a range expansion bar, and we went through this period of a month of chopping around. And then as it starts moving up, the ranges are pretty much about the same. Then it narrows. And now this week, the range picked up in size compared to here where it started. And this is the idea of a wide range bar ending the move. Now, it's not excessively large, but it's larger than what was going on here. And that's because of the acceleration in the move. So, as we look at that and say, well, trend is up, all good. Little bit of a extension here from price support, maybe a pullback. And well, today's Friday, we'll see what happens. But again, I would like to see, what we like to see sometimes happens, and many times it doesn't. But if I had to pick a choice as to something going into the next week or so that would result in possibly a very profitable point in the market, I would actually like to see today accelerate higher. So again, this bar is just starting. And the reason I say that is because that would increase the probability of a market high point. Not necessarily the top when we think of tops and something big is going to happen. It could be, a larger correction pullback. But as I said, as prices are running and then they sprint, probability of a larger pullback, and we can profit from that. Now, if this range was to accelerate or increase in range and this would go higher, well, then this would be a much larger wide range bar and much more convincing of an ending wide range bar. So I'll be watching to see how that plays out. Now, SPX levels. I think it's going to be a little difficult today because the ranges are narrow. So if that will happen, do you think the market will become more predictable? If it was to accelerate to the upside, yes, because now, look, everything that we do based on charts is based on historical patterns that we've seen from the past. It doesn't guarantee things, but when we see multiple concepts coming together, so in this case, an acceleration to the upside, far from support, a weekly trend that's been going on for several months, and now the range expands. And we look at other markets to see are they up at big numbers. So this is at 3,500. I don't know how big that is. Maybe it is, whatever. But more of a range expansion. You could say, well, here's a measured move. Here to here, we could get our measuring tools out or whatever. So maybe the measured move is coming together. Our market internals here, I don't think I've ever seen anything like this. And I've been doing this about 30 years. I don't think I've ever seen anything like this where sentiment is up this high and breadth is so terrible. So, one of the lessons here is no matter how long you're doing this, the market is going to show you something that, at some point you're going to scratch your head and say, what's up with that? So we all know that the FANG stocks is a few stocks that are, pulling this market. And now we start to see some participation of laggards where, the S&P moves up and the transports moved up a bit. We're waiting for the Russell to kick it in. So maybe that breadth begins to improve. But historically, we know that when we see a market going this way and breadth is sideways to down, it's not a good sign. But the market is not pulling in, right? Buyers step up every time. So we'll see. When the time comes that it turns, it'll be obvious to everyone. What we're talking about here right now is to understand what that looks like. And as much as we might think that this market is supposed to pull back, well, we can think whatever we want. But until we see something that actually confirms our thoughts, that's a fact, right? We have to be objective and go with what is, right? What breadth was better yesterday? Well, on the chart there? Not really. Not really. You can call that better. This was good, where it spiked up to close to 1,500. But we've got this market that's going up like this day to day, and this is at 0 to negative to barely positive. That stinks. So saying that it was better yesterday is like grasping for straws to our hope that this just continues. Well, I mean, even to say it's better, McGraw, like I said, it's kind of like saying I'm just trying to make the case that everything's okay when this is in my face telling me it's not okay, and this is telling me it's not okay, right? 3340 on SPX, 3440. Okay, we've got a little gap there. That would be a sizable pullback. I would agree. I mean, unless for whatever reason the market just gets ugly, I would say yes, because it's in an uptrend. 3440 is the bottom of that bar there. Unless today, for whatever reason, and we can't speculate on that because we got no reason to think it, that all of a sudden this market collapses, I would say I would agree with you that 3440 should hold. So if there's premium there, and then, again, I like it. That's right about the area that I said. Looking at the S&Ps, different number, but I had said here 3440 kind of matches. That this area, looking at the overnight trading, lines up with what you're saying. So yeah. SPX hourly looks like stage 3. Well, for those who don't know, stage 3 is a top. Well, it's going sideways, an M top. So kind of going back to that old concept of stages, base, uptrend, sideways, top, stage 4 downtrend. And this, depending on the time frame that we look at, right, we can make it meet the definition that we want. But as far as the hourly goes, this being a possible M top, whereas the S&P up a little bit, it's probably not over the highs here. Wide range bar down, maybe it pulls in a little bit. So with that being said, I don't know, I haven't looked at premiums, but up above here, how far away, I like to use how far away can we get from the danger? How far is this likely to go up today or unlikely to go up? 3520. Another 20 points if we can get above that. And so Jake is posting there 3530, 3545. That sounds good. 3450.
Hey, Greg, will you answer this for us?
I don't know about the 50 part. We'll see. Post that for. All right, let's see what the other markets are doing. It's already late. I'm talking too much today. You guys are.
Can you hear me, Greg?
To talk. Anyway, now the NASDAQ 100 looks more. I look at that chart and the thought of you asking me about a stage 3, that is more of a stage 3 because it's bigger. Do I have you muted, Dan? No, I don't have you muted.
Yeah, I'm
Probably don't have
talking.
your mic on. My computer doesn't say muted.
Others can hear me.
Unless I change something here. Microphone. Oh, because my speaker is set to my.
Would no, because Alex sent you that app to tune me out like he uses. I understand.
There we go. I fixed it. Did you say something of importance?
Yes. Comment, the Fed Powell spoke yesterday about interest rates, and it's all over the journal today about, hey, what they did with inflation, keeping it low, blah, blah, blah. But my question to you is, every article was saying it's going to keep interest rates much lower in the future. So my question is, why did TLT tank on that news that they're going to stay lower?
Oh, last I remember from yesterday, bonds were near support.
No, bonds tanked, TBT rose, but on the news of their policy decision is going to keep them lower than expected for longer. That's all I'm asking. I guess I don't care, right? But it's just had my head scratching when I was reading the articles.
Well, so all right, we're gonna get beyond our pre-market thing, but
That's fine.
so what's going on here as we step back as to what's going on, right? In February, coronavirus, the world's coming to an end. We're all going to die. Nobody's going to be making any money. Recession, unemployment, whatever. So at that point, nobody's going to borrow any money. Interest rates go down, right? No one can borrow money. Nobody's making any money, right? Bad economy. So whatever the Fed says, we see the rotation now into the junk that got killed, which means the corona story is near its end, which means people are going to go back to work, which means people eventually are going to open businesses. They're going to spend money. They're, other than what the government is throwing out there for, hey, free, you don't need to work. That's all going to stop and things are going to get back to normal. And as they get back to normal, people will want to borrow money. Interest rates go up because there's a demand for money. Markets anticipate the future. So why is interest rates going up? Because the markets believe that things are going to get better. So all of this worrying that, okay, of the end of the world, I'm exaggerating, of course, but all of that's what's gone on, no matter what comes out of the mouth of the Fed, right? And Alex sent an email last night about W Day, and I responded to him was, okay, now as we talk about economics and fundamentals and all that stuff, it doesn't mean crap. Look at what the chart says, and what is that telling you? So, if interest rates are now going up, right? That means that the markets believe that things are going to get better. So, what's wrong with that? Well, as interest rates go up, at some point, people start to think, hey, if I can get this percentage of my money over here without the risk of buying Facebook that at some point now is overvalued, money starts to rotate. So, that's what's going on. So now I've left very little here as far as the markets and giving you your time, Dan. But everything pretty much we can see here is chopping around. We'll see what today brings. Oil, we saw bonds. I got to change the symbol here. Oil is just dead, but looks like it should break out, which makes sense. If there's a demand for money and things are getting better, there should be a demand for oil to do things, and crude oil should go up. Commodities should go up. And gold is just sitting here. And so this is moving up. Everything is anticipating that the world wasn't coming to an end. I suppose that's why the markets have gone up for the last several months. And now we are getting confirmation that the reality of this, first there was speculation, and now it's becoming evident. So interest rates are going up. And so as the markets now begin to accelerate weekly wide range bar, right, sentiment in the stratosphere, breath stinks. At some point, maybe this, even next week, makes it seem like this is the most fantastic market ever to exist. Let's revisit. And I don't, it's not the same because we don't have inverted yield curves or that, but just revisit the psychology of 1999. The most clear markets that things are so perfect, you better start worrying. Enough of me. All yours, Dan.
All right, thanks. Yeah, no, you summarized my question by saying, regardless of what Powell was blabbing about, the market didn't, believe it. Or maybe it's one of those things on earnings that they go up on bad news because whatever he said, they expected something different. Whatever. I didn't care, but you're the good intermarket analysis man. All our opens are fine. So we got a put spread on dunking that's down a little bit, but our put spread is under support. Let's look at the gappers here. No, Sebastian, we wait. Yeah, Sebastian's asking about RCL. We have a covered call here. I also gave a new put spread. Beautiful. That's a beautiful 15-minute ascending triangle. Beautiful. Big morning plow. Higher lows. All right, Avid, as we know, yesterday got that contract, had a big old gap breakout, gapping up here again, but if it sets up as a day trade, fine, not my style for a swing. Ken, we're all right. So Penn here, I was watching as a possible call spread yesterday, but there wasn't any juice. Now it's gapping down. I don't know. Ken, we're short. We're short naked puts on space, but yeah, I like yesterday's bottoming tail on support. So if you're not in it, 30-minute high would be an idea. Virtue is still gapping down. This was a sell setup at resistance. That could turn out to be maybe a call spread or a day trade short. This thing blasted yesterday. Look at that. Look at the gap down now. Wow. Easy come, easy go. That's what we call a Bear Island reversal. Leaving this big guy all by him lonesome with gaps on each side. Looks like a, I don't know, penny stock toy of some sort. Tesla gapping up again. I've been saying, I posted on our Facebook page that I thought this was just going to keep churning into the stock split date, which was 8/31. 8/31 is Monday. So good, up here again today. I hope on Monday it gaps up 300 points. And then I think that's our short-term top. Alex, you and I were talking about wide range endings on something yesterday. This is a wide range ending on the monthly. The biggest bar after multiple bars far from the 20. Look at the angle of that. Have any of you ever been in a rocket ship? Elon Musk, did any of you take a test drive on that thing yet? Look, this is what Elon's rocket does. That's like an 88-degree angle. Wide range bar, that, in my opinion, don't tell Pat this because she loves Tesla. I think pity the fool who's investing in this right now. Pity the fool. You got to get on these things when nobody's talking about them, and when the when the chart suggests that the smart money's accumulating. You don't do it when it's on the cover of every darn magazine and the cab driver's talking about it. That is the time. And when the chart confirms it, of course. That's the time to get out of Dodge. Musical chairs are coming. You better take your chair and hit the exit. All right, let's continue. Gap up here, but no pattern. Bets. Oh, Bets. I love that name. I love the name Bets. The symbol. Now, you know, Dunking's getting hurt. I'm just assuming by the company name that this is a competitor of Dunking. But where the heck were we on this on this bar right here? Red bar ignored, a turn on support. This was one I was not watching. Oh yeah, it's the ETF. Yeah, ETF Bets. You know what? I do remember looking at it when there was an IPO. I take that back. But I stopped watching it. But wow, right? They must have some very strong things in there with Dunking's weakness. All right, RCL, we're watching a pullback. We already have a put spread that's going to expire at full profit today, and we also have a covered call that we're capping our gains. So we gotta work on rolling those. Walmart here is now in the picture of wanting to buy TikTok. I mean, other than advertising, I have no idea why. You know, they aren't a tech company. Anyway, so maybe that was attributable to their strength yesterday, because that's a very unusual standout big bar. BAC, yep, I mentioned yesterday I liked it. We got into XLF. I like too. They're selling off a little bit here. As always, let's chill at the open. Here was a casino I found yesterday when we were scanning. I like this one, MCRI is a 123. I have it posted already. XLV we were watching. CPA I posted as a put spread. This I wish I got us into this earlier. 123. This was in an airline, which I didn't even know. CPA Copa Holdings. This is one of the best looking airline stocks I've seen. So let's try to they've really opened up the spreads right now. I actually, believe it or not, put an order in pre-market to try to sell that put spread on CPA. But the spreads are monstrous right now. But that would be a fantastic one, McGraw, to try to play market maker.